Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's been a long time, but we're going to try and have a look at gold and silver today. CFDs on gold and the SLV, our proxy for the silver market. Now, it's been a fair old while since my last update, and the main reason for that is the price action appears to be clearly impulsive off of the low, but it subdivides horribly and it is incredibly difficult to know where you are in it. So it's one of those things where I've been leaving the chart in the hope that it will clear up a bit. There's still things I'm not happy with, especially ever since this moved down from the 2000 top. What was either a B wave in a flat or an X wave in a combination here. The way we finished down here and then this move up off of the low, whether this is 1 and 2 or whether this is the bottom here, it's all just been a bit convoluted and a bit difficult to make sense of. So I've got several counts to try and explain it, but I'm still none the wiser, to be absolutely honest. I'm still fundamentally bullish. The primary count is still bullish, expecting a fifth and final move higher in a larger cycle wave 1, and well, yeah, that's basically what I'm expecting. I think we've been in a very long-winded sideways correction that started in August 2020 and completed in either September 22 or a little bit later in November 22. And since that large free wave move completed, we've now bounced strongly off of that into a new wave higher. And essentially I'm thinking it's either not done yet and got a little further to go to get a wave 1 into here, or we've topped and we've now got a correction to come to a higher low before moving off. And that is, on the big picture, relatively simple, and I feel pretty confident in that. Making sense of all of this overlapping crap here, and the curving nature of this move screams extension and screams wave 3 extension, but we just don't seem to be going particularly strongly, or we're subdividing as though we're an extension, but we're not extending as though we're an extension, which is just the thing that's missing here a little bit. And the bearish counts are even worse in terms of making, for example, my only real bearish count for this move here is that we have a free wave swing like this, in which case this looks ridiculous relative to this, and so I tend to favour the bullish count purely because thinking that that's free just seems kind of ridiculous, to be honest. But then again, ridiculous is possible, putting it simply. So enough chit chat and nonsense. Let's try and sum up what we're talking about here. So we're assuming the wave 4 is complete at one of these lows, and we're now being bullish for a moment, so we're only really concerned with the move off of that low and how it looks. So let's bring up our moving averages on the weekly. Let's go out to the weekly time frame first. So we can see that we eventually settled somewhere around the 38.2, that's in log. We came all the way back to the 50 in linear, and we got these 3 wicks in a row, like on a weekly basis. Ping, ping, and ping again. The fact that it's turned out to be a bit deeper does have me reconsidering the possibility that we actually had 5 waves up to here, but I can't get the wave 3 to work at all. So I still believe that this is just a deep wave 4. We come in and we body the candles on the 250 weekly exponential moving average, the green line here, and we wick down to the 50 3 times, find strong support, bounce. We come to the 60 exponential weekly moving average here, wick through it, body at it a couple of times, go through it, back test it twice. If we just have a look at a fib retracement from the high here for a moment, we can see that we're back around the 38.2 as we bump back into resistance here. So This essentially, this 38.2 to 50% retracement zone off of that move, that's kind of very typical of where you would expect to see a B wave settle down. So for example, if you'd come down here in 5, and this did look like 5, 1, 2, 3, 4, 5, then a move like this, A, B, C flat, extending beyond here. For example, if we just take this extension, we can see that we come straight to the 1618 here, where we snag as well. So we get this kind of area between the 38.2 to 50 and the 1618 extension, where the bearish count I felt was still a 50-50 proposition coming off of that low because of the difficulty we had to come down here. Since then we've extended way past that extension, all the way to the 261.8% extension, which seems too much for a flat pattern. We also come through the 50 retracement here, and we actually break the 61.8 as well. So let's bring up the golden ratio, 61.8 and 65. We don't quite make the 78.6, which is still just above our heads. So we didn't really stop where you'd think we'd stop if we were coming back, if we were going A and B down. If we had 5 waves down here, clear the 5 waves, okay, like that, instead of having this 3-wave structure where there should be a wave 3, an impulse of 5, then maybe you could point to this being a zigzag into a deep 2, but it doesn't appear to have a zigzag structure in it, not at all. It appears to have an extended structure, a series of overlapping lows when we come down to a smaller time frame, so it just feels bullish. So that's what I'm going with. So I know it sounds like I'm, you know, qualifying my remarks, but it's purely because it's just a bit of a headache making sense of what's going on here. Now if we look at the indicators on the weekly time frames, just get rid of the correlation coefficient with the dollar there, we've come all the way back up into overbought on the weekly time frame, and it's the strongest overbought condition we've had on the weekly time frame since the highs of August 2020. So strong move, strong move off of the low. We can see here in the histogram. The histogram beats anything since the August 20 high as well. So we had a really vigorous move off of the low. We had those 3 bounces on the 50 and we went for it. So in that sense, it looks pretty strong. Come down to the daily time frame, and we can see how we've been weakening on the daily time frame quite considerably over the last couple of weeks, with a series of lower highs here at the top of the RSI. Now we were talking about this, or I had a few people talking about this on the Discord, and we clearly pointed out in a recent live stream when I was doing a quick update on gold and silver how I saw weakness into the top here, and we were expecting some kind of correction. Correction is now underway. We saw that crossover here on the MACD, and still, and even though the average crossed through the signal, we started to build up bearish momentum, we were still eking out extra highs. So an obvious and clear sign that we're about to sell off, and we've done so. Now that is essentially all I've really got to say from a classical analysis point of view. So now let's come in and have a look at how we've interpreted this move off the low. So first things first, let's go back to what I'm still calling the primary, which, sorry, excuse me, I just realised I need to put this into that alternate count. Bear with me, there we go. Alright, so I saw this, and it still looks like it, apart from the last leg of it. We have a WXY into an a very overlappy, higgledy-piggledy mess, but definitely corrective looking as opposed to impulsive looking in my mind. And then we have a B, C zigzag 535 with a triangle in the B, bringing us to a 99.9% retracement in the B, significantly deep enough, or very much deep enough to be a B wave of a flat, and that's how I've looked at it. A, B, C. We then come down in C to that 50% retracement of that whole move up in the wave 3. And if we look at what we did as an extension, I don't think it hit any specific target, but it settles between the 100% extension of A and the 123.6, and that's where we find our C low. So not a 123.6 or 161.8 extension like we would expect to see in an expanding flat, we did not get that expansive B wave high. We got a regular flat instead, so a shallower C, but it goes beyond the A by a small amount, and all of that is absolutely exactly what we'd expect a regular flat to do. But then comes the issue of getting down in the C. So we get 1, 2, 3, 4 and 5 to here, and then we had what looked like an impulse. I mentioned it before, but then we failed and moved lower again. So the only way I've been able to make sense of this, to get this to be motive, because I need it to be motive if this is going to be the C wave of a flat, is to go 1, 2, 3, 4, 1, 2, 3, 4, 5 into the fifth as a diagonal in the C. Okay, and that brings us, because I'm sharing this 4 finish here with 2 separate counts, this and an alternate, that brings us to a low here in November. Okay, it's not particularly pretty, it doesn't subdivide beautifully either, but that's the best I can do if I'm going to get it to finish down here in a motive structure. Okay, now from there, this is the mess we've been presented with. Okay, 1, 2, 3, 4, 5 off of the low into wave 1, zigzag into wave 2, and from here the best I've been able to make of it is 1, 2, 1, 2, 1, 2, 1, 2, 3, 4. I'm giving myself a break here because the wicks we're dealing with in these smaller moves overlap, whereas the closes, the bodies of the candles, do not even close. Right, so I'm just giving myself a break and ignoring that wick. You might be cheating a bit, but I'm going to run out of room if I keep overlapping 1s and 2s. So I've got to get a subwave in here somewhere, and that's where I'm putting it. 1, 2, 3, 4, 5 micro degree into 3 into 4. 1, 2, 3, 4, 5 into zigzag ABC into 1, 2, ABC 3, ABC 4, ABC 5, a diagonal of sorts. It may actually be that. Sorry, ABC 3, ABC 4, ABC 5. Into 5, into 3, ABC zigzag into 4, 1, 2, tiny 3, tiny 4, 3, 4, 5, 3, minute degree down here, zigzag at minute degree, although we had a zigzag here as well, so no alternation. And then I just run out of ideas at that point. So I'm either saying that somehow there's a different count in here that I can't see because of all this overlapping mess. I've been back and forth multiple times. We're either still in the wave 3 of 1, 2, 3 of 3, 4 and 5 of 1 at intermediate degree, then 2 big retracement 3, 4, 5 into the top at primary degree to come over the next year or so. Is essentially what I'm expecting. But off of all of that weakness into the top looks very, well, weak, putting it simply. So considering the possibility that this is actually a top we've got here, and this is a wave 1, okay, and this is the first 5 waves off of the low, and now we're going to get 5, 3, 5 back. So all I'm looking for is for this move down to get a little too deep to be believable anymore. Now the way I've got the invalidation point is back here. This is the invalidation point of wave 4, so wave 4 cannot cross into here, right, at which point we're coming down way too sharp, way too deep. So at that point I'm going to say, well, this was the top and this needs recounting. Be my guest, feel free to figure it out. And then we come down here in a zigzag looking for a retracement of 50 to 61.8% preferably, which is, if this is the first leading 5 and it doesn't look done, that could be very much likely the case, because if that's A, that's going to come down here, B, C, come back down here into the value zone and look for a retracement, look for a reaction, back in the direction of the trend to set up a long trade. Okay, I didn't mean to do that, bugger. Sorry, let me just put that invalidation point back in place. And that is essentially the best I've got for that interpretation of things. Now I can tidy it up a little bit with an alternate idea. If you just bear with me a moment, we'll look at that. And then we'll look at it naked and see if we can see anything we haven't spotted yet. So Next idea is DZZ alternate. Now we still get a sideways structure, okay, but this actually, although it's a sideways structure, is actually a sharp correction. I know that doesn't make any sense because this feels like it wants to be a B wave all day rather than an X wave, but WXY into WX and then WXY into Y, double zigzags within zigzags. Yes, I know it's just not very pretty, but this way I can get the correction to complete in a ABC diagonal of a Y of a Y to get our 4 down here. That gives us this bottom in September and the first low ABC but down into November, which is ever so slightly higher, so it's just incredibly deep too. And the way I look at that is, bear with me, it's here somewhere. Counter low, alternate low, that's the one. And then this gives me 1 deep intermediate 2, so I'm saying intermediate degree here. So what I'm doing is I'm stepping everything down a bit, so we're just going to eke out another high of a wave 5 above 2000. It may push, because we don't think we've done yet in the 3, it may push higher and get it considerably, maybe up to 225, 2500 perhaps. This could also be minor degree, I haven't decided. 1, 2, 3, 4, 5 into 1 into 2 to get a larger wave, but all the 5 has to do is clear the wave 3 top, so this is being a little less bullish, and interpreting this count slightly differently off of the low. So we get 1 into 2, 1, 2 minor, slight overlap, 1, 2 minute, all of that subwave extension, 3 tiny 4, 5 3 at minor degree, A B C flat into 4, and now moving 5 into 3, then 4, then 5 into primary 5. It's not much better, to be absolutely honest, guys. We've got the same weakness. Both counts are calling for another move up at the moment, and the only reason they're calling for another move up is because all of this subdivision does not call for it to have topped. Right, so if we're going 1 2 1 2 1 2 1 2 1 2, you need 3 4 3 4 3 4 3 4 3 4 3 4, and we're not getting it at the moment. I can't figure out for the life of me how else to count this. I have seen people try to call this a diagonal, but there's no retracement off of it. And one of the most common mistakes when looking at a contracting diagonal, a contracting wedge, is to confuse an extension for a diagonal. But a diagonal will be followed by a retracement. Okay, an extension will not. An extension will explode higher, and this is what this does. Woof, up here, right? So it's definitely an extension. It just looks like one. And there's so much overlapping of subdivision that that's what we expect to see. Now we tend to see wave 4 into 3 into 4 into an overlap into 3 into 4 into an overlap, and we've become more aggressive. We've gone through prior wave 4s, what I'm assuming are prior wave 4s. They're such a mess, I honestly can't subdivide them. So that's a little out of the ordinary. It's not unheard of. A larger wave degree can correct deeper at wave 4. So that's essentially where I'm at. So I know you're probably thinking, well, that's no bloody good. Essentially what I'm saying to you is it's either a top of a smaller wave 1, okay, we're coming down into a 2 before going rocketing off in a 3, okay, or it's 3 of either minor or intermediate degree correcting into a 4 to go higher to a new high in intermediate degree, or into a 5 into a 1, and then that will come down in a 2. And that's the best I can make of it at the moment from a bullish perspective. So for me now at the moment, I'm just waiting to see if we come down lower. If we do come down lower, I'm looking to see a 50 to 61.8% retracement into this territory here, coming back into some of this noise back here, some of this support, and see what kind of behaviour we get down here. Do we get 1, 2, 3, 4, 5? It's going to take a while, I imagine. Come down in a zigzag perhaps. And if we do, and I get a reaction out of here, I'm a buyer again to new highs. Okay, and that's how I'm going to look at it. If we get another move to a high, I'm going to consider that 3 into 4 into 5, and this trend still continuing. And then I'm going to, once again, wait for a larger wave degree to top out and retrace before I add to my long positions. That's all I've got for the bullish count at the moment. So let's come over and see if we can make any more sense of it in the bearish count. So turn these off for a moment. That's that alternate low. Okay, so here's the idea of a cycle wave top having occurred, and we had a unexpected and very brief wave 5. So we went, the 3 and 4 we were thinking was done was actually done a long time ago, and it was a sideways combination of zigzag, double zigzag in this case, X wave, triangle. So zigzag into triangle, sideways combination into 4. Not a very common sight. And then 5 waves up in a rush to a truncated 5th of a 1. So there's a lot to not like about this. And then from here we come down in 1, 2, 3, 4, 5 into an A, and this is the idea that this is a flat pattern. Here A, B, and now this is C. Now 1, 2, 3, 4, 5 I was thinking roughly equivalent to the A, longer than the A of course, because the A was so tiny and the C's extended to the same point. And that seemed, I think it was the 1618. Here we are, the most likely place for that expanded flat C. It could have stopped at the 1 to 1 and been a running flat. It could have stopped at the 123.6. It went to the 1618 and expanded, so that's a typical expanded flat, especially with a large B wave like that. But it hasn't stopped there. It's gone on to the 2618 up here, which is an extreme extension for a flat pattern, but not impossible. Got to reiterate that. Lower probability once you go past the 1618 that you are looking at the C of a flat. You are more likely looking at an impulse. Okay, kind of similar, not the same obviously, because the relationship with the A and the B is different depending on, you know, the length of the A and how far the B extends beyond it. But it's kind of similar to when you go past a 1618 in an impulse, right? You're expecting 1 to 1 or somewhere close to 1 to 1 for ABC, and then you carry on past it. Now if you carry on past it and there's a shit ton of subdivision in it, you can say, oh, that's definitely a 3, and it definitely normally will be a 3. An extended 3 with a lot of subdivision in it is more common than an extended C occurring in a zigzag. And you can think of that to some degree the same as in a flat. It's not impossible that it becomes subdivided as a C and it extends higher into the 2618. It's just less probable. So if that's the case, and that's A and that's B, we got 5 waves down in C to come. Okay, and we're getting a big zigzag at cycle degree to come lower. And at that point we will take out these B wave lows and where the A wave completed back here, and we will come down in 5 big waves. So things will start to clear up, and we'll get 5 down into a 1 as opposed to 3 into a 1 into a 2. To go higher we'll get 5 down, and that will be 1, and then we'll come back in 2, and then we'll carry on and make new lows. That's a bearish way of looking at it. Okay, I don't think I have another bearish way, or an extreme bear case here, sorry. So an extreme bear case would be that this is 1 and 2 already off of the high. Okay, and we've had a B wave top up here from a huge move all the way back here into A, and this is 3 waves up into a B. Now it looks like 5, so make of it what you will. I would put it here to make it look like 3, but I can't get that to be an impulse, and a 99.9% retrace in the 2 seems unlikely, especially when you've got no evidence of an impulse from here. So I guess you could say 1, 2 if you can make it work. I haven't been able to. 1, 2. It's really not going to matter though whether you had the B over here and went 1, 2, or you get the B over here and go 1, 2. This is still 1, 2, and that's going to be bad. Okay, and we're going to get 5 larger waves down, deep down. taking out 2016 lows, most likely, if that's the case. So you'll be coming back below a grand in gold. Okay, and this is a huge topping pattern, it's said, and that's the most bearish count I got. Right, as you can see, that one's not very fleshed out. I feel that one's better because at least I can get it to finish up here. Okay, with the alternate cycle wave top, I can get 3 into 4 into 5 into 1, A, B, C, down, and that C could be tremendous. That could be almost as bad as that wave 3, and that could bring us back. Well, the invalidation point would be all the way back at 10,048. Wave 2 could potentially retrace 99%. It doesn't happen very often, but if we're willing to consider the possibility of that having been it, then we could have the same on the opposite side, couldn't we? That is essentially how I see the bearish count. So let me sum up. I suspect, given the data we have with the RSI and the data we have with the MACD and the divergences which are built up, I suspect that we put in some kind of temporary top. Okay, I can't get it to count cleanly. Just can't do it with all this overlapping noise. So there's a contradiction there between what the Elliott wave, this extension, is telling me, because there's... Okay, let's just count them. If we ignore this one here and this overlap, let's just count them from the November low we've got. So that's the first move, then we've got 1 overlap, 2 overlap, 3 overlap, 4 overlap, potentially 5 overlap. There should be 5 overlaps at this end as well, and there sure as fuck isn't. Okay, so I just cannot get that to complete as a wave 3 extension unless it's not done yet, and we're going 3, 4, 5, and then I can get it to finish. Okay, so if we roll over and continue down here, I haven't really got a clue how to count that up to there, but I'm just going to say sod it, that's the top, that's the best I've got to work with. Let's look for 3 waves back. Okay, and then 1 and 2 back in the direction of the trend, and that's an entry to go long. And that's it, guys. So that's kind of what I'm waiting for. If we move higher again from here, that's going to clear things up. This was free, whether it's a flat pattern, whether this was a diag, whether this is a sharp zigzag, whatever the hell it turns out to be. This was 3 into 4. This was the 1 and the 2, or this was the 1 and the 2, and this is the 3 of the 4 of the 3 and the 4, which will overlap into the 4, give us another overlap, and then we get the 5th of the 1, and then we get zigzag into 2, and 3, 4, 5 if we go higher. Alternatively, these are all intermediate degree waves. We poke on those above the high to finish the 5 of the 5. It's game over. That's the top, and then boom, we get that massive crash. Right. We're just going to have to see how it develops and how strong this next move is. If we get a move up into a 1 and a move back into a 2 prior to the previous highs, I'm going to call 1-2 on that and look to see an explosive move in the 3. If we push ourselves to new highs in a completed 5-wave structure, I'm going to be on alert and I'm going to be on guard for a major reversal. I'm not saying it has to be, I'm just saying 5 waves up to new highs. That's a sucker play to buy those new highs, to buy that breakout. That's a liquidity grab potentially, and a big retracement would likely come off of it either way, but it could be the top. Okay, so that's how I see gold. I know it's taken me a bloody long time to get through it, but it's just a mess. End of story. Now I could go on to some degree about parallel channels and pitchforks and stuff that we've got to look at, but honestly I don't want to spend any more time than I've already spent trying to make sense of this thing. Okay, so we're now going to come over and have a look at silver. So having gone over gold first helps, because we are in a similar situation but not quite as messy here in silver. And what's that similar situation, Tom? Well, we've either topped in a 1 and we're coming back in a 2 and then we're off again. Right, that feels perfectly acceptable to me. I might be able to get this to top out a little bit better than I have in gold, but my primary count still says this is 3 into 4. There's a 5th wave breakout through the prior resistance to come, because that's a liquidity grab. Right, there'll be a lot of non-Elliottians, non-Elliott wave traders out there who will be watching this downward resistance. They'll see a break above it and they'll be dumb enough to buy it. Right, because then we'll come back, bounce again, maybe for one more move, everybody will get bullish, and then we'll have an actual correction. Okay, and then we'll move higher. So even then, you get shorter term traders who might buy the breakout and then get hit by a retracement into the trend. That's also possible. I want to see, I'm already long, but what I want to see if I want to add is I want to see a completed 5-wave structure, and it just doesn't look like one yet. Doesn't look like one yet. Looks like, see what I mean? It looks more like 3. It could be 5 if there's a smaller wave in here somewhere, but that would look a bit awkward. But it could be there. So I'm kind of leaning into it being 3, 4, 5, and we're going to break that trend to get a 5. That's going to be a bunch of people piling into the breakout, bunch of liquidity for the short side, and then we'll come back. Okay, so that's kind of where I'm leaning. We came back to the golden zone, and like we did 50, 50, 50, 50, 50, 50 on the gold, we went basically golden zone, golden zone, golden zone, golden zone, and then popped in silver. So we wanted to rally. This is a regression channel from this high to this low. As you can see, we've come beyond 2 standard deviations from the mean before. It's quite common in silver. Silver is a very volatile asset. We've done it again, but more extreme here. But we've still come back to this resistance trend from this high to this high to these highs. So we're still at resistance at the moment. I'm still bullish. My primary count is bullish. I struggle, honestly, to figure out how to get a move lower. Because it's already been a hell of a correction. Going back again to August 2020 through to August 22, it's 2 years we've gone sideways for. And we're coming off of the lows here at $10.90, right? We made new lows in silver where we didn't in gold. So a big powerful move off of those lows, and back to the golden zone screams 1 into 2 to me, and that's why I'm bullish. Now if we look at what I've actually got for the bullish count, we're going to have to come down to the smaller time frame. That's the lower count, bear with me. Off of the low, let's come down to the hourly, and we'll do a bit of classical analysis as well, which I'll kind of skip that segment here in silver. So unless we go for a truncation here, which is still possible, that was this 3 and this is 5, and that was a truncation, so we can start counting from here instead. We can get 5 up into 1, and that becomes a better looking 1, and then down into 2. However, that is a pretty severe truncation relative to the lows we made here. It's not extreme, but it is pretty significant. So I prefer to look at this as 1, 3, 3, and 5 down into C, so big expanded flat. Here, the B wave target is the one that's extreme, not the C here. The B goes almost to the 1618. Actually, it does go straight to the 1618. And then we come down, and then the C goes beyond the A, which we'd expect in a flat, but I think, you know, I think I'm talking nonsense, because in order to make that extreme target, we've got to go, no, 1618 just beyond. So we basically go 1618, 1618. So it's an expanded flat with extremes in the B and the C, not 2618 like we're seeing in gold and trying to make it into a flat. So it's a believable flat. 1 into 2, deep correction for a flat, admittedly, but extreme moves. 1, 2, 3, 4, 1, 2, 3, 4, 5, 3, W, X, Y into 4. Let's come off of log. And now we're going to get a 5th wave move higher. So looking for a bounce, break through this trend, get that 5th wave into a minor 1. Grab a bunch of liquidity breaking that trend line, get a lot of people, you know, getting their knickers wet, and then we'll come back, and that'll be the opportunity for us to get long again, or to add long if you're already long off of this pivot back here. So that's how I see silver. So gold and silver are still linking up. They are still saying 3, 4, 5, one more move, but I am suspicious that we've actually got a top here. Okay. So exactly how we pull that off, this is where all of this crap gets in the way. Okay, and we've got the same with that move in the wave 3 in gold. Now, it's just sometimes just how the chart looks. Okay, it's not always clear. So when I say that's the best I can do, is it's either a sideways combination into 3 and 4, or this is a top and there's 5 waves up to here. I will let the retracement tell me which it is. Okay, because if this is 1, then this little move back is not enough to be a 2. Okay, we're looking for something deeper and more prolonged in time frame. If we continue up again, then that's 5 in my mind. and that's 1. Okay, and then we'll come back into. So that's the way I'm looking at silver from a bullish perspective at the moment. We really are getting stuck around this prior resistance line here. And we just take the pivot from the high to the low, set up a golden zone here. You can see how we come back to the 50. Right. Now, I don't know what it is. Certain markets like certain levels more than others. And 50 crops up quite commonly, I find, in commodities and in gold, and especially in silver, but not necessarily in how can I say, not in all retracements, but they tend to be, gold and silver, pretty respectful of 50%. I don't know why it is. Maybe it's an older market, and once it gives up 50% back to the buyers in it, they think that's fair price, and off you go. Maybe that's why. I don't know. That's pure conjecture. It's like with sometimes the extensions we see in the tech market. I've considered in looking at tech stocks and looking at the Qs and looking at the Nasdaq, we tend to see more extreme extensions. There's just more bullishness there when it's unleashed, and things tend to reach a little higher in those tech dominated areas. That's why I used to use the 707 as a retracement. We sometimes get those deeper retracements and those greater extensions. Not always the case. Sometimes we can have very bullish shallow retracements in the tech sector. We're not having them now. Since interest rates went up, things have collapsed. But anyway, I digress. What my point saying here, in more in older markets, we tend to see that more conservative levels like the 50 and the traditional 61.8 level, like we're seeing here in the long-term retracement in silver, and that 50% retracement in gold, they tend to be respected more commonly. Okay, but don't quote me on that. It's just a general observation. Now let's come out to the daytime frame for a moment, and we can see, if we look at our RSI is probably the best example we've had here. Very strong move back, not quite to oversold conditions, but we had extreme bearish divergence building up. Okay, so you often you don't get a warning clearer than that we're about to sell off, because that was going on for a long time. That weakness was. Same here in the MACD. Crossover the average through the signal here, and moving lower, building bearish momentum the whole time. Okay, looking pretty bearish overall. If we look at the OBV, the move from below, you could argue that there's still a trend that's still intact. Okay, we like to see trend lines broken in the OBV. It tends to suggest that a bullish move is complete, a bearish move is complete. It's not always the case. It's just a good sign of the negative accumulation of volume coming to a close, or positive accumulation of volume coming to a close. So we just see a lot of weakness, right? We get it here, like I said, the MACD here and the RSI. Ignore that. I used that for a different video. Just looking at the relationship between the dollar and silver and gold, but either way, 1, 2, 3, 4, 5, one more breakout to come, grab a bunch of liquidity and reverse. Feels right to me. Okay, but it could be a top here at resistance, and in which case we'll sell off probably quite deep, looking at how bearish the momentum's become over the last couple of weeks. Probably a sign of something, a significant sell-off to come. Is there anything else I want to talk about? Moving averages, we've recaptured the 60 and got a golden cross of the 60 through the 250. Now, you hear golden cross and you hear death cross, right? And not being not being contrarian for the sake of it, but it's often the case that when you get a death cross, it's not always the case you get a low, not the bottom necessarily, but you get a low. So take the death cross here, for example, of the 60 through the 250. A lot of people will sell this. The low comes imminently afterwards, and then we rebound. Okay, the death cross here, we get a low, but it's only temporary, and then we move lower again. Golden crosses can often be quite similar, where they announce a high approaching, not necessarily the top, same as a death cross, and then we get a sell-off. Well, we got golden cross here a little while later, and that was the high. Currently that was the high, and now we're moving lower. So just be wary. You don't buy golden crosses, you don't sell death crosses. It's too simplistic. Okay, it's too easy to get caught. But I'm filling up time now, and let's leave it there and leave a bullish count there, and have a quick look at if we have a way of getting lower. I have a final ABC. It's the only way I can see this going lower. We topped here because we have 5 waves up. I can't get this to be 3 into 4 and a 1 back here anywhere, so I've always concluded the count here, and this being an expansive X wave or an expansive B wave when I considered this possibly a flat into a diagonal C, but that never materialized. So W, X, Y, X, Z not behaving like a triple zigzag, not giving us a sideways combination of flat and zigzag flat, or flat 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 in a double or triple three. So it is a triple zigzag with a very, very big final zigzag in the Z for ABC. Now if this is the case, everything will accelerate down here because we've got 5 waves now coming down here in the C. So there are possible bearish counts, but I'm leaning on the bullish side. We've come back to 61.8, we've bottomed multiple times in the golden zone, we've bounced. We've done the same with the 50 in gold, and we've bounced. Okay, I think silver is an entire primary wave, an entire wave behind at the same degree as gold. So gold has completed wave 4, or is close to completing wave 4, and silver is completing wave 2. Okay, back here. And then silver will do 3 while gold does 5. Gold will top out and start to sell off. Silver will blow up. Bit like altcoins and Bitcoin, I guess you could argue. It is one of those phenomenons which has happened in the past when you observe the gold-silver ratio and the spread between the gold and silver ratio. What tends to happen? People buy gold first, and then gold just gets too expensive. They look around and go, "Oh my God, silver's still cheap by comparison," and they all pile into silver, and silver goes racing off after gold after it's topped. Okay, I'm not saying it's exactly what's going to happen, but we're nowhere near the highs in silver at all. We're near the lows. Okay, and in gold we're near the highs, so that suggests that wave 3 is done. And we're near the highs, looking for 5 to come up. And at silver, we're still near the lows, suggesting that wave 2's done. So it does feel like we're an entire wave behind. But anyway, that's the way I'm looking at silver at the minute. 1 into 2, bounce from here. It could be the top at resistance, and I'm just going to let the retracement decide. Okay, so if we come down like this, bum bum bum, that's 2, right? Because it literally can't be 4 because we would have invalidated the count. If we get another bounce off of a 250 here maybe and move higher, I'm going to look at that as 5, that becomes 1, and then I wait for a deeper retracement in 2, which is I would much prefer to see, because we're going to do enough to trap liquidity here for the longs, right? And then we'll come back, torture them for a while, and that'll give us the best possible buying point for a wave 2. So anyway guys, we'll leave it there. Thank you very much for joining me. I hope you found this video interesting. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, huge thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in joining the Patreon, there's a link in the description box below. Head over, have a read if it is. Feel free to sign up. We'll be glad to have you. And if you're not following me on Twitter yet, please do so, as I always announce new YouTube videos on Twitter. Alright guys, take care of yourselves. I'll be back with you as soon as possible. All the best. Bye bye.